Let's do a little exercise here before we wrap things up. I want to just give you a snapshot of what's on my mind. Okay. Forget the lines. Just understand the concept. Let's do this. First, let's take a fib retracement from here down to the recent low. And your ballpark number is 50% is 538, give or take. And a 618 is 544. So your 382 is lower than we are. So we're in between a 382 and a 50%. Your 50% is up here above. Now, here's what I want to point out. So let's do this. 382 is at 538 right here, something like that. That's a 50%. And then we have a 618 at 544 and a half. Okay. Right here. All right. That's all I want to point out. All right. So there we have one that is going to be at the trend line. So if we just move this over, okay, that's going to be right about the trend line. Wherever that came in, that's close enough. 538. This is a little bit lower. So it's at the trend line. All right. So we don't need that anymore. So we know that one of those retracements is at the trend line, which also happens to be right around the area of, we're going to call this a breakdown candle high. Why? Market gap lower again. This is like no man's land breakdown area. It's like halfway breakdown area. Call it whatever you want. I don't have a name for it. Okay. But that breakdown candle high, I'm calling it a breakdown candle. That high and that trend line are pretty close. You have moving averages above and a gap above, and that's a higher retracement. So I'm saying right in this zone here, and this is a little wide. We narrow it down for a minute. This is a little wide, and you're starting to approach, even if I just do this. That's what it is. And what the reason I'm bringing this up is because you have turnaround Tuesday ahead. So if they got up into this zone, I would be really interested in a short today. You got turnaround Tuesday and you have waning velocity. So it's not just the turnaround Tuesday. You have waning velocity, but you don't have waning velocity intraday, but you have it. And up at that trend line, I'm going to start getting interested in buying some puts and giving myself a couple of days on the clock. And if it's wrong, I know what the risk is. The risk is going to be, and I'm making this up for anybody that's interested in this. You could be $100, could be $500, could be $1,000. The risk on this for me is not going to be a $10,000 risk. It's not going to be a $5,000 risk. That's not what this is. Okay. This is going to be an educated opinion. That's what I'll call it, on where a B leg would ensue. What do I mean by that? A leg up off the bottom, B leg is a pullback, and a C leg would be another rally leg to complete above the high of the A leg officially. So I'm playing for this. I'm playing for B, and I think B is going to occur somewhere right in here, the top of A, I should say. All right. That's what's on my mind.